On this episode, I answer this question: what is a reverse mortgage? Welcome everyone to this episode of the Ask Jason Gelios show. I'm Jason Gelios, Michigan Realtor. Really appreciate you guys tuning in here. If you're new to this show, I want to let you know that I upload a new Ask Jason Gelios show once a week, primarily on it'sallabouttherealestate.com, my website. However, I put it all over social media as well, including YouTube, Facebook, Instagram. So really appreciate you guys tuning in here. Be sure to hit the subscribe button if you're watching this on YouTube, and follow, like. If you're on my website, it'sallabouttherealestate.com, go ahead and sign up to receive this in your email once a week. Somebody was asking me, what in the world is a reverse mortgage? And so I've been wanting to answer this. Now, I do have a mortgage background. I was in the mortgage industry for over a decade, prior to coming to the real estate side, this side. However, I have a little disclaimer, and that's I am not an active mortgage lender giving advice or whatnot. I'm just simply sharing what a reverse mortgage is. This is a pretty good question, just because there's a lot of advertisements out there that advertise to a select group about reverse mortgages, typically the elderly. And so somebody asked me about this question, and I felt the need to answer it on this episode. So a reverse mortgage is kind of like a home equity line, right? It's kind of like a home equity line, only it's reverse, meaning if you qualify and you have equity in your home, a lender will take the equity out and provide it to you. So if you don't have any other means of supporting yourself, if you have a home that has, equity in it, then by all means, you can use that to actually gain, to provide you income per month. So I feel it's a pretty good option, but I want to dive into it a little bit more here on this episode, just to kind of give you some pros and some cons, because like everything in life, there's pros and cons. So first off, how do you qualify for this reverse mortgage? Okay, it's not for everybody. It's not for somebody who is, let's say, 30 years old and has tons of equity in their home. You would just have to do an equity line and you get the money up front. So, okay. The main requirement for a reverse mortgage is that you have to be at least 62 years old. If you're 62 years old, you can partially qualify for this type of mortgage. If you have a spouse that wants to be on the mortgage, but they're not 62 years old, at least 62 years old, right, minimum, then they cannot be on it. Whomever is on the reverse mortgage has to be at least 62 years old. The property must be your primary residence, so you cannot do this type of mortgage on a second home or an investment property. You just cannot do that. And you have to go through consumer counseling, okay, so that the government knows that you, or feels that you at least understand what you're doing here, because a reverse mortgage is not your typical mortgage. Nothing to be scared about, but it's not like a regular traditional mortgage, okay? You must have a lot of equity in your home. This one's kind of obvious, right? The money's got to be there. If your value is $100,000 and you owe 98 on it, you really can't do much. So you have to have a lot of equity in your home. The typical rule on this, it depends on the lender. Ask your preferred lender, or reach out if you need a referral. But ask your lender, hey, what's the requirement? Typically, it's almost always higher than 50%. So you have to have at least more than 50% equity in your home. That's what they typically look for. But again, consult with your chosen lender to get the exact amount, okay? Lenders might look at other factors that come into play. So, credit score, they might look at that. They might look at debt to income, okay? Which is, that's pretty much common on any loan. Now, the lender will not actually consider DTI too much, if at all. Again, consult your local lender or your preferred bank of choice. They typically don't look at DTI because you're getting the money back, which would raise your DTI, right? More money, less debt. Your credit score is not so much consider it as well. But they just look at these things because that's what they like to do. In some cases too, if you have outstanding student loan debt, which at 62 you probably wouldn't unless you were going for something crazy, expensive, like maybe you were becoming a doctor and you owed 100, 200 grand, right? They typically don't approve you for this. So what happens when the loan is due, right? So the lender is giving you this money. Let's say you get your reverse mortgage approved, everything's coming through, right? And then what happens? Well, it becomes due if the homeowner or borrower, right, moves or sells the property, or if you don't pay the taxes and insurance, right? You also have to maintain the home. You can't do a reverse mortgage and your home is falling apart. You're not fixing it. You're not, and I'm talking about major things, right? Flood in the basement and you don't do anything about it. Okay, if the lender finds out, and more than likely they will, they can make your loan due. So which you have to pay all that back. We dove a little bit into the reverse mortgage thing. I want to dive into some pros here. Okay, I'm gonna share with you two major pros of doing a reverse mortgage. One is the obvious in that it takes your equity and it gives you money to live on. So if you're older, you have expenses, things that are making it harder for you to get by each month. This is one great option for you to get money back and help with your monthly bills or pay off stuff. It's a steady stream of income that lasts for years. Now, you can convert the equity in your home into a pile of cash without having to move out. You don't have to move out to gain access to that. Another pro is that the money is tax-free. So when you earn income, you're taxed, right? Most of the time people are taxed. So with this, you get the money and you're not taxed on it because essentially you paid it when you were living there. So a reverse mortgage is considered a loan, so the IRS can't get its sticky fingers on it. So that's kind of a little note I put there. Now consult your tax preparer on that. That's about as far as I'm gonna go into the tax part of it. However, I have heard too that reverse mortgages do not affect your Medicare payments or Social Security payments, right? Or SSI. It shouldn't affect it at all because you're getting your equity back in the form of cash payments. Now with every pro, there's a con, right? So I'm gonna share with you two cons related to a reverse mortgage. Number one, the difference is that with a traditional loan, the debt decreases every month, okay? Since there's no mortgage payments with a reverse mortgage, your balance increases. With a reverse mortgage, it's opposite. Your balance is increasing, and you're getting the money though. Kind of like how the banks do. Another con is between the interest and other costs, the debt may eventually exceed the home's market value. This could actually happen where you're getting the money back, right, through a reverse mortgage and home values drop. It could be over, okay? Now the good thing about this is that you are typically not on the hook if that does happen to the value. One thing too though is that one major con that I see, especially being a parent, is that if you want your children to inherit the house, they could be stuck with that steep bill. So if you do a reverse mortgage and you've taken out, let's say $100,000, and then you pass, something happens, and then your children get the home, they could be stuck paying that back. Which in my opinion, I mean, okay, that is a con, depending on how much you took out. If you were conservative, great, but the value's not there, the kids have to sell the home. And which, when I was in the mortgage field, little side note here, when I was in the mortgage field, some people were hesitant about doing a reverse mortgage because the children didn't want to lose that potential inheritance. And maybe I shouldn't be saying that, but that is just true. Children, they're thinking, inheritance, someday this house will be mine, or whatever, we can sell it, whatever the case may be. That was a big challenge, was having children understand that this is probably the best thing for their parents, because if things are tight, this is a way to get money to live. So just be aware of that if you're thinking about doing that. Have that conversation with your children. So is a reverse mortgage a good idea? Well, I have some questions that you really need to ask yourself, okay? Number one, Do I want to maximize what I can leave to my heirs? Number 2, am I going to live in my home deep into retirement, or am I going to want to move and downsize? Number 3, how much extra income will I need to meet my needs? How much do I need from the home, right, to cover the basics? I don't need a crazy amount, I need just the basics covered, right? Number 4, can I pay the taxes, insurance, and meet all the obligations that come with a reverse mortgage? When you're speaking with the lender, ask about the reverse mortgage obligations, right? What are you signing up for? And the last one, certainly not least, right? There's tons of questions out there. Do your homework. But unlike all those people who have been foreclosed on, do I really know what I'm getting into? This goes back to asking the right questions. Don't be afraid to ask the right questions when you are looking at doing a reverse mortgage, right? You do your homework, okay? Ask some people who might have done one. Maybe you know somebody that qualified for this and they did a reverse mortgage and they can tell you a lot about it. Ask the professional. Make sure you go through a reputable company. A lot of big name lenders are not doing reverse mortgages anymore. It's kind of a controversial thing. I feel it's a good option if you have no other options and you're just getting by. So this about sums up reverse mortgages. Now, it's certainly not everything about them. There's a lot of homework that has to be done when you are considering doing a reverse mortgage. I feel that families should be involved with it because it affects more than just you, the homeowner. It's certainly not a bad option if you don't have any other options as far as paying things per month, right? If things are tight, then yeah, I mean, it makes sense to look into a reverse mortgage. I don't recommend going through these companies that you see advertised online and all, online banks and all that. Check out your local credit union, see if they'll help you out, or maybe a smaller bank in town near you. But just make sure that you do your due diligence, like everything else, like anything else in life, right? When you're searching, when you're buying a car, when you're buying a house. When you were a first-time home buyer, right? Just make sure that you do your homework. I'm Jason Gelios, Michigan Realtor. Follow me on social media. I really appreciate you guys watching. Be sure to sign up to receive this every week so you don't miss out. That's on my website. It's allabouttherealestate.com. Thanks for watching.